Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. 3 weeks ago, the market exited out of the mid-August to mid-September bullish Andrews pitchfork by closing below the lower time, currently to 1685 on a Friday. The following Monday saw an immediate counter higher, as if the market did not like being below or even so close to the November 2014 high. That's below at 201.25. Yet soon after, prices dipped again, testing the November 2014 high until Friday 2 weeks ago. The market made a key reversal up, if only just, based on this same November 2014 high at 201.25. This daily key reversal ups were a maximum effort to move up and touch the broken lower time once again overhead, and it lasted the whole week until last Friday, when prices finally volte-faced and headed down with a bearish opening black Mariposa. As I said last week, this was not impressive behavior if you're looking from the bullish side. It's also not impressive if you are a bear, as you'd think we might have a half decent move lower after the original break in the lower time. Thus, we ended up neither being impressive on the top side nor on the downside since early October, when prices started to ping-pong between the November 2014 high as support, that's below the market, and the July 2021 high at 217.85, that's on top. This week, as we start off, it seems the bears are in the ascendancy again as prices head towards the support at 201.25. But as I said earlier, overall it is still not impressive. Thus, until prices tackle one or other of those two congestions, the resistance above and or the support below, then we may well stay here for a bit, in a bit of a wideish range. Finally, as a housekeeping point, the bullish Andrews pitchfork will be retired after today's commentary. London coffee. Since the middle of September, the market had maintained a sideways action between roughly 2100 below and the August 2017 high at 2173 until 2 weeks ago. That's when we saw the market take a move higher up to the next congestion at 2279, where, somewhat surprisingly, given the amount of ammunition that had been stored up since the middle of September, the market ran out of steam and formed a pipe top 2 weeks ago. Prices then dropped down to the top of the congestion zone. Further attempts to head lower failed at the August 2017 high, supported by the June 2017 high at 2177, such that at the end of last week we saw a bullish engulfing pattern finish off the week. This saw a follow-on higher on Monday last week, all the way up to the same congestion overhead at 2279, where prices got stuck. The rest of last week was a series of halting steps lower, such that last week we closed right on the nascent early August uptrend, currently at 2186, just over the same two August and June 2017 highs. Today prices have taken a surge lower, down through those two highs and into the congestion from mid-September to late October, or roughly between 2100 and 2173, where we'd halted today. Thus, this action has expanded the single pipe top from 2 weeks ago into now a possible horn top formed over the last 2 weeks. What will now be interesting will be to see if the market has the legs to keep going below the August to date uptrend that it has already pierced today. This is because, as I said last week, and I quote here, there is the possibility we have a large rising wedge pattern from July to August time, which is still working its way through now. Yet I find it a bit of a stretch to call it that, at least just yet, but it is worth noting and paying attention to for the future. It's currently between 2186 and 2340. End of quotes. If this is a true break of this rising wedge pattern, then we could see a possible target down in the 2110 area, which happens to be just below the rising medium moving average, currently 2123. I have not labelled any target or targets, it is too early for that, but it's not too early to start talking about it. There is another nearer possible target for the recent horn top, which could be in the 2075 area, nearer the lesser Fibonacci area, currently at 2074. That would also be interesting to watch out there. Only consecutive closes over the top of the recent market, that is over 22.79, would negate these at this time as an idea. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.